back to the Forex Lounge Fundamental Extras. Today is Thursday, May 13th, 2010. Welcome back, one and all. Great that you could join us. Today, Bloomberg.com reports Australia's job growth accelerated in April, propelled by full-time employment, indicating diminished slack in an economy fueled by resource shipments to China. Employment rose for the second straight month by 33,700, exceeding the median estimate of 22,500 in a Bloomberg News survey, a Statistics Bureau report showed in Sydney today. The unemployment rate held at 5.4%. Jobs gains were led by Queensland, source of much of the coal shipments to China. Getting to the charts now, we can see the blue line represents the unemployment rate in Australia, actually ticking up from the 5.3% to 5.4% over the past month. The violet line represents the 12-month moving average, and we are below the 12-month moving average. And as unemployment goes down, this shows the economy is improving. Therefore, although unemployment seems to have ticked up just a hair over the past month, we're still below the 12-month moving average, therefore a sign of growth in the Australian region. Now, compare the unemployment rate in Australia, that is the violet line in this case, to the RBA, that's Reserve Bank of Australia interest rate history. We know very recently Reserve Bank of Australia raised interest rates again to 4.5%. Historically, during prosperous times, when the unemployment rate falls, the Reserve Bank of Australia tends to raise rates. Over the past few years, as the economy has turned down, the unemployment rate has moved up to historic highs, going up to 5.8%. The Reserve Bank of Australia has lowered rates. Well, more recently, as Reserve Bank of Australia has raised rates, the unemployment rate has fallen. I would not think that this is a cause of great concern unless we see the unemployment rate break above our highs October of 2009 at 5.8%. So if we see an employment rate in Australia rise to 6% or above, that could be a sign of a change to come to the negative. However, so far that is not the case. Now, compare the unemployment rate, again that's the violet line, to the ASX 200, that's the equity index. During prosperous times when the ASX 200, when the stock market goes up, unemployment tends to fall. When the stock market goes down, unemployment tends to rise. Well, the stock market's pulled down just a hair off of its highs as unemployment has started to tick up to the upside just to a small degree. However, generally speaking, we're still in an uptrend in the stock market, and we're still in a healthy downtrend below its 12-month moving average on the unemployment rates. Now, compare the unemployment rate, that's the violet line, to the Aussie dollar currency pair. As unemployment falls, we know the Reserve Bank of Australia tends to raise rates. As they tend to raise rates, the Aussie dollar tends to rise. Now, it's not a completely fair comparison because the Aussie dollar has two currencies within a pair. However, generally speaking, as unemployment falls, Reserve Bank of Australia raises rates, and this tends to lead to strength in the Aussie dollar currency pair. With that said, if you have any questions, do not hesitate. Email us anytime, info@forexlounge.com. We thank you for joining us. We wish you a great day, all profitable trades, and we look forward to seeing you back soon. Back inside the Forex Lounge.